All right, and just like that, we are on. What's up, everybody? My name is Brian LeBlanc with Where Rebels Are. I stream on Twitch 4 days a week. I talk about the market, investing, and personal finance. I've got 19 years of experience in finance in general and 11 years as a licensed and registered broker. Today, I'm going to talk to you all about GameStop and the shenanigans going on. So hopefully you find this video helpful. If you liked it, go ahead and leave a like, hit the subscribe, wherever that happens to be. And then go check out my Twitch channel. I'll make sure to add a link in the comments down below. Anyways, on Twitch, I talk about finance, GameStop, obviously, kind of monopolizing the conversation recently, given the shenanigans of WallStreetBets. So I'm going to give you guys a quick breakdown. Hopefully you find a little bit of guidance here on how to protect yourself in this trade craziness. And my hope is that more of you guys walk away from all of this with a profit and don't look a gift horse in the mouth and end up being in a loss position. So without further ado, let's break it down. The first thing to note is I do fundamental and technical analysis when I look at stocks. Technical analysis is pretty compelling. There's a lot of increased volatility, which means there's a lot of opportunity. That comes with the caveat of you need to make sure that you're employing strong bankroll and risk management disciplines in order to come out of this unscathed. However, the hype behind it with WallStreetBets, and I'll get to them later, so don't worry. The hype behind it is definitely caused a lot of people to dismiss caution and jump into this headlong. So hopefully you guys don't take too much of a loss. Hopefully you guys can walk away with a gain. And you're here because you've got questions on GameStop. So let me break it down for you. On a fundamental level, GameStop has lost the last 4 quarters. They lost 417 earnings per share, and that equates to about a $291 million loss. If you look at the losses from 2019, it was $8.01 per share, or $558 million for the year. Revenue's been on a steady decline since 2019. They went from $8.5 billion to a projected $5.3 billion in 2021. That's significant because that's a 37% decline, and anybody who's been following GameStop just as a retailer understands that they are not doing well adapting to the new environment. They cost anywhere between $1 and $2 billion a quarter to keep their doors open. That is operating expense, or a total of $6.8 to $8.9 billion a year over the last 3 years. Near-term assets for the company are $1.6 billion, half of which is tied up in inventory, and only $446 million of that is actual cash. The total assets for the company are $2.6 billion, and the total liabilities are $2.2. This leaves a net of about $332 million positive equity. Given the current cash burn rate, that is the difference in losses between their revenue and their operating expense, they are burning through about $100 million a quarter on average. This means that if you project that out, GameStop has about 10 months to drastically change their story and their business, or they face bankruptcy. So why do I dive into this, and why is it important? Most of the new investors are coming through Robinhood, Webull, Tastyworks, etc. They don't have access to the in-depth information of underlying companies. You're also taking your information from sources like Reddit or other stock forums that you follow, and it's very easy to jump into that hype herd mentality. Okay, I am not going to stand in the way of traders for this, because honestly, you either got to learn your lesson or hopefully you do have some sort of plan or strategy to actually capture profits. And there are profits to be made here, both on the upside and the downside, so keep that in mind. However, from a fundamental standpoint, you need to understand you are trading an asset that is quickly deteriorating and almost worthless. It's not there yet, but it very well could be. So about the news that has been used to hype up GameStop and try to make a case that no, they shouldn't go out of business, the first news we have on deck is the Microsoft GameStop partnership. Okay, this was called in the news, and it was very much broadcast by the bull groups trying to say GameStop is going somewhere. It's not. If you look at the actual details of this partnership, it's more of a vendor relationship. GameStop is paying Microsoft to update their point of sale services and give them access to cloud management for operations and inventory stuff. That's money out of GameStop's pocket and money into Microsoft's pocket. Not a benefit to GameStop, really. The next thing is Microsoft is allowing GameStop to sell and distribute Xbox All Access. Okay, this is something that that Microsoft has usually kept to themselves in the past for distribution. So they are giving a cut or a commission for the sale of a membership. They are not giving a revenue share for things that are bought and sold on Microsoft All Access. So understand that this is not as big of a boon overall to GameStop as people expected. How many Xbox memberships are they going to sell? Maybe one per 5 or 10 consoles sold, right? A lot of people who are upgrading their console don't need the membership because they already have it. So this is only going to be for people who are new to the Xbox and they can actually buy the Xbox All Access in store, which didn't used to be available. They would have to go online and sign up. So it is a small commission given to GameStop at the point of sale, not a revenue share, and not really that big of an addressable market. The next story that really blew up GameStop and people tried to overhype was Ryan Cohen of Chewy. Ryan Cohen is experienced in e-commerce. This is definitely something everybody, including WallStreetBets, agrees that GameStop needs desperately. You need to understand that in the past, GameStop bought and then shut down. They didn't even try to sell the platform of ThinkGeek. So they already had an e-commerce attempt. It failed really terribly, and they just couldn't manage or understand it. That being said, Ryan Cohen coming with the experience as a leader could be helpful, but it proves that GameStop does not already have an existing infrastructure that is conducive to really building that up. So, do you think Cohen can turn around the company in 10 months or less is where it comes down to. You need to also understand that Ryan Cohen is one man. He is on a board of at least 10 members, which means he has a minority voice. Okay? If they don't like what he's pitching, they don't have to do it. The next thing is he is not guaranteeing the change, or he's not bringing in additional financing. Just because he's involved does not mean that people will finance the amount of money that will take to establish and launch an e-commerce platform. And that has been estimated to be as much as $1.8 billion. And if you look at the size of the company, that is, what, 60% of their total overall net worth, their total liabilities, total assets, not their total net worth. So it's a pretty significant chunk. It's a big ask for anybody from financing, and them getting that approval will definitely be from someone with big, deep pockets and a lot of willingness to gamble. So that is the fundamentals on GameStop, okay? Take it for what you will, but honestly, as a long-term investor, I will tell you, nothing here makes a case for me that GameStop has bullish opportunities long-term. I think they are slowly marching to their death in about 10 months or so, and they will face bankruptcy still, because you need to remember, in spite of the hype that is surrounding all of this activity, that is the share price. It has nothing to do with the day-to-day operations of the company, as well as the company is not actually making money from you buying and selling their shares. They sold their shares on the market a long time ago. They already got money for that. Now what the shares do is completely independent of the company's operations, and it doesn't affect their bottom line. Except for the one possibility that GameStop might take this opportunity to list additional shares. Okay, that's good for the company. That's bad for shareholders, because what that means is your stake or your percentage will go down depending on how many shares they list. It will go proportionately. So 10% means an immediate loss in 10% equity for you as an investor, but it will be an immediate boon of cash to the company. That would be a smart move from the leadership of GameStop, but I don't know if they have anything in the works or if they'll be able to act on it fast enough to take advantage of this inflated price. If they do it, that cash will be vital and it will give them a chance at survival. If they do not, bankruptcy is still just around the corner. So all of that is the fundamentals. Hopefully you get some information of that. Again, take it for what you will, but you're getting a very strong and clear message from me. Buyer beware, be cautious, be careful. there's not a lot of chance for this company to survive. It can, but it's not likely. The next thing I want to point out is the WallStreetBets involvement. So I know that this is going to get a lot of flack on my channel and possibly some backlash. So nothing to do it but just to jump into it. This is a whole new level of shareholder activism, okay? Kudos to you guys. Good job. I'm glad people are getting involved in the market. They're really wanting to participate in things, and they're showing that collectively retail investors can actually make a change. That is the end of my praise for you guys. But what you're doing now to GameStop is very much a mob-like mentality or mechanic, okay? You are catching the attention of regulators. I do not think that they have grounds or a case, but that does not mean they won't attempt to target you guys for market manipulation. So if you are participating in this with a strong level of fervor, be cautious, be careful, and understand that there are very real and possible repercussions for your actions. It may not come tomorrow, but it will come eventually to some people. So be careful and understand that if you're participating. Next thing is, y'all need to understand people are getting hurt. Not everybody is printing tendies, if you will, or getting major gains, okay? I am watching the forums, and I will tell you that the losses are being buried. Your community is very much hiding the dangers that is going on with this. Not everybody got in at $45. There are some poor, unfortunate souls who bought it at $150, what was it, 58 was the high, $158 as the high on GameStop. And they're stuck. They're stuck holding the bag. It's now $90. There's very little opportunity that it will continue to surge higher than that. And so there's going to be a significant amount of folks who are retailers, who are participating in the surge, who helped pump the stock, who are losing money. Now, some of you guys made money. Those of you who got in early, those of you who were quick in and outs, good on you. Good job, but be careful. Right? You are hurting real investors that are just like you. It is not just the institutional investors who are facing losses with all of this going on. So with that note, I do need to say, as clearly as I can, that WallStreetBets and their popularity, I know that this is going to be what gets me a lot of the backlash, but they are starting to trend towards being equivalent to, so WallStreetBets is to the market as the equivalent of QAnon was to the alt-right wing movement. So y'all need to be careful about what's going on, because it's dangerous and people get hurt with that kind of stuff. I said it here. I say it clearly. Don't go to WallStreetBets for your information. It is a very dangerous place. Be careful. That being said, I will not stand in their way. I'm just going to avoid anything that they put on their radar. And I recommend you do the same. Now, on to the next section, just so you can kind of understand. I have a chart here. I was and have been tracking GameStop for my community for some time, and I called out when we were at about the $20 to $25 mark that the first short squeeze trigger point would be at about $33 or so. You can see that this move on January 13th closed at 20. Oh wait, no, that's the open. Sorry, the close was 31.40. The next move here kind of went sideways, and then we close in this pop. Let me get rid of that. You don't need that. Then we moved into this pop, and then the close moved up to $43. Okay, so this triggered a little bit of buy activity. You can see it reflected in the volume. And then after that $43, which was my second short squeeze trigger, 44 actually was my target. You see a significant surge in the price. This was Thursday, just 4 trading days ago. And then Friday happened here. I'm sorry, yeah, this was Thursday, the 43 close. Then Friday happens, this huge surge, and then Monday here. I need you guys to understand that from a short squeeze mechanic standpoint, there's too much to get into on just this one video, but they have hit all major short squeeze and any recent trading activity trigger points. Okay, basically a super quick and dirty way to do it is to take the average expected price over a given period of time, multiply it by 1.3, and you can find the people who are over leveraged and what point they are likely to have to cover short positions. That being said, though, institutional investors have about 3 days. Some of them will be given grace up to 5 days to cover a margin call on a short position. They can cover it either by depositing additional cash. All right, so they don't want to close their position, they can deposit extra cash. They can sell off, or I'm sorry, in this case, buy back a portion of their investment to cover that up, or they can make additional trades in other securities to try to offset the losses being had. So with the different mechanics that they have, they are given a little bit of additional grace and time. Retail investors, however, are not as lucky. Your margin call is due at the point it is triggered, and you should close it that day. However, some brokerages, if they're larger and you've got a good relationship, will give you up to 3 days in order to cover that position. It's trade plus 2, so the day of the call plus 2 additional days. The day that it starts is the day that triggers. So understand that that is a mechanic. Also, with the short squeeze data, most of you guys are using free resources to find out what the current short rate is, how much percentage of float is short. That is delayed until settlement, and not all brokers report on the same frequency. Some brokers are reporting once a week, some brokers are reporting every single day, and other brokers are reporting only at the point of settlement. So it could take up to 3 days to actually see the full results of the short squeeze reflected in the share float balance. Okay. Also keep in mind, your activity is attracting other sharks and whales. So other major investors are paying attention to what's going on. They see it break a price of 150 and they say, I want to get in and short this because statistically it is going down. I've seen a big hype or a big push on Volkswagen, VLKAF. All right. And the history of Volkswagen. There was so much emphasis on this squeeze that happened to Volkswagen, a similar story, okay? Climb, climb, pop, and crash, okay? You need to realize that this crash is a very real aspect or mechanic of a short squeeze. The increase in inflation and price is only temporary, and it only lasts as long as people are willing to hold. There are a lot of poor and uninformed investors out there trying to hold their 150 position on GameStop, hoping that it will come back in order to give them a return that everybody else saw who got in at $40 or even $60 from last Friday. So with that being said, and that an understanding, this is how people are getting hurt. This is how a short squeeze works. Just really rough outline. And I do think that the majority of that push is over. Based on recent trading activity, the next short squeeze trigger point for all new short sellers over the last week could be as high as $180 or more. So the likelihood of that triggering is possible. Okay, I'm not going to rule that out given what I just saw this week, but not likely. Last point that I need to make is to address the institutional whales, the big traders, the hedge funds. There are significant players out there with a lot of money invested in this. They are getting additional funding from their friends and circles of influence to continue the aggressive investing approaches. All right, short sellers on the institutional level are losing money, but they also have more money, so they will get more money. They are okay with loss strategies. So tax loss harvesting is a very real aspect of the ultra wealthy in order to manage their taxes and hopefully offset gains from other endeavors. All right. It could be as simple for an institutional investor as let's do a $10 million loss. And with that write-off, I will then be able to capture, without paying taxes, about $100 million in gains elsewhere. So this is a real strategy. It makes sense for them, and they use it and employ it on a regular basis. So just because you're beating them now does not mean that they really care. The next thing after that to understand is they are willing to gamble. Because of this willingness or ability to take losses in portfolios, they may be willing to out gamble even the fervor that we're seeing on WallStreetBets. So be cautious, be aware of that, and know what you're up against. The next thing is they could also decide to turn this into an opportunity to try for revenge. So a lot of the institutionals might have seen it pop over the 100, 150 mark, 120, I don't know, whatever level they picked up here arbitrarily, and started to over short it again. So all of the short sellers that you wiped out here over the last 2 weeks are now entering back here in order for a new, and now much more thanks to you guys, lucrative opportunity for a short sale. Again, fundamentally, nothing has changed for GameStop. So they know this. They understand this. The short-term fervor and moves of a stock do not change the overall business direction. So that brings me to my last point, though, is to understand how easy it is to manipulate stock prices. I saw over the weekend a lot of fake news articles claiming things like Kathy Wood from ARK Investments has decided to buy into GameStop and she's giving it a $4,000 price target. On the surface, it did not look like this was a satire, even though it was a satire article. And I guarantee you, thousands of investors looked at that article and said, she's in, I'm in, let's go all in for GameStop. That is complete manipulation, and that was probably done from somebody by WallStreetBets. The next thing to understand, anybody on the planet can buy a press release that will not get verified for anywhere between $300 and $600. You can get it nationally distributed, internationally distributed. You can get it sent to all of the big publications that may or may not verify the accuracy of the news story. And with all of that understanding, it's easy. It costs absolutely nothing for an institutional investor to manipulate a stock price, let alone the the news, I should say, manipulations that I saw from WallStreetBets. There were so many reviews, so many additional articles written or overwritten to try to hide the fact that the GameStop Microsoft partnership was not actually a revenue share system for GameStop. They don't have a lot of prospects for additional revenue from that partnership. A lot of people overhyped Cohen's involvement and downplayed the minority position he has in the company. They also completely failed to highlight the fact that GameStop has attempted and failed in e-commerce before. So all of these things to be taken into consideration. Move forward with GameStop soberly. My direct advice to you is if you've got a gain, take it, walk away. Be done. Let this move on to the next investment and feel sorry for all of the people who lost money, because a lot of you guys did. If you're in a lost position, don't hold it expecting it to come back. Take whatever capital you've got, because rule number one for investing is you need to be in the game. Don't get yourself priced out. Okay, as soon as you lose capital for investing, you get locked out of margin access, maybe trading access, maybe you lose everything that you had saved up and ready to invest. And that's part of the reason why investing should never be done with any money you are not willing to lose 100% of. Because if you go into this and you've got the wrong expectations, you're going to find yourself hoping and praying, which is not an investment strategy. So with that in mind, take your positions, gain or loss, move on and look for the next trade and do better research next time. Hopefully this helped you guys. My name is Brian with Where Rebels Are. I'm going to go ahead and end the video here. If you liked it, again, hit like, hit subscribe. And if you really liked it, come join us on Twitch. I'm there every Monday, Tuesday, Thursday, and Friday from 1 p.m. to 4 p.m. Eastern. Thank you guys and have a great day.